All right, my next guest has a strong message for you out there, folks. I want to bring in now RDS Wealth President, also their CEO, Dale Smothers. And Dale, you're telling investors, be cool.
Be cool.
Your message, you have a lot of parts of your message. We've got part of it on the board here, but I'm glad you're on today because people need to hear this, right? You're saying that the message to investors, fear created this sell-off, sentiment will reverse it, and we are buyers while others are hesitant. So what makes you feel confident that this is the story?
Yeah, Charles, this is the story because people are waiting for clarity in the market. They're concerned. They're either battling the fear monster of the market's going to continue to dip farther, or they're battling the greed monster of I want the market to dip farther before I buy. And the reality is, if you wait for clarity in this market, Charles, it would be like waiting for harvest season to plant your crops. You've got to plant the crops, weather the storms and the sunshine, and then reap the harvest on the back end. This is planting season in the market. You mentioned just a few minutes ago that we've got the mother's milk of the market, the earnings growth that continues to climb higher. We see it in 2026 in low double digits, maybe mid double digit earnings growth. And with that, you and I have been doing this long enough to know that the market tends to follow earnings.
Right.
With strong earnings growth,
Right.
we see this as a buying opportunity.
And I'll just add on, people who've waited, and I know people are still waiting for the next shoe to drop from 2009. A lot of times what happens is the turn will happen and they'll say, well, I'm waiting still, and it never comes back. Trying to pinpoint the bottom is a crazy, crazy mistake. Let's talk about your sentiment roadmap, and because your target, you're looking for 7,000 by this summer, July or August. So Ron, that will fix sentiment. Sentiment will then attract money, and that money will chase value. I guess the argument here, or the question here, is what's considered value?
Good question. And for investors who are looking for value right now, you've got names that have crept into the value sector, if you will, that have never been there before. You've got companies like Microsoft, which I think still has a little bit of downside, but my goodness, that's an incredible value right here. Amazon's another one that we really like. We really like the Amazon play. It has been a lagger in the Mag 7, and buying this dip makes a lot of sense. NVIDIA has become a value stock. It's had almost 3 quarters to grow into its valuation, and we look at NVIDIA as the tow booth on the AI highway. As traffic begins to pick up, it's going to be collecting. I like that name for our investors. And I think it's important for us to understand that it depends on what your timeline is, what your time horizon is, and the portion of the portfolio that's designed to go out and seek opportunities. Names like this give us those opportunities. One other one we like is Palantir.
Right.
Palantir, in our opinion, is the operating system of the AI world, and it is creeping not only from government, but it's now creeping into healthcare and the private sector.
Dale, let me just add one caveat here, because I'm with you on this, that these are, our value plays. I think they're de facto safe havens. Can we just real quick add that maybe a caveat that they may be more volatile than traditional, value stocks are. So people who might be used to the calmness of a value stock that has a low beta, they should be warned that maybe before doing these. But let's move over to AI infrastructure as well, because I know that's an area you like. You just mentioned Palantir. Another name is Applied Digital. And what is it about this? Is this one of these things where the spending's happening, so you don't have to guess on who's going to win from the spending point of view? You know that they're going to be the recipients, part of it.
Certainly. And the beta here in Applied Digital is off the charts. The volatility is going to be there. We're buying this dip with a price target of around $40 a share from where it sits right now. And to be real frank with you, Charles, I think that Applied Digital is a place that you could park money and let it ride for even the long term. But you've definitely got trading opportunities in this name for our clients who are out seeking alpha with high beta as an okay factor.
Right.
This is a good name for us.
By the way, I'm glad you said that. I'm in it too. We're down on it right now, my subscribers, but we're not going to sell that. You like the utilities as a sector, right? The XLU, beautiful chart. We've got the 50 and 200-day moving average there. It's held up above the 200 significantly. Testing that 50-day, which is done from time to time, it feels like, it holds here. The next leg up looks like another high from here.
Next leg up is higher. Utilities is the next chapter of the AI story. How are we going to power these behemoths of a place like Applied Digital, for instance, data centers. We also like CoreWeave. This is going to be a drain on our utility sector. And when we see utilities bid higher or even more utility companies coming into play, this XLU ETF is going to be a benefactor. I think XLU is a solid play and a little bit more stability perhaps on the AI trade for those who are used to a lower beta position.
Absolutely. Dale, thanks a lot, my man. We covered a lot and those some great points. I appreciate it.
Always a pleasure, Charles.
All right.